Hey everyone, it's Evan here on September 30th, Friday, with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off the video looking at some of our popular individual names. We're going to jump right into the action today. It was the end of the month, end of the quarter, end of the week. And let's take a look at where some of the major averages closed. We're going to look at a monthly chart first, just to get that high-level view. You can see the S&P 500 did close lower. We're looking at the SPY ETF cash market, probably a little different, so only slightly lower when you're looking at the cash market for the S&P 500. But we'll look at the ETFs just to make things simple. That's what most people are charting here. So finished down 0.5% on the SPY ETF, but you can see, take a look at where these lows are, right at the old breakout level of 212.50, that general area. So we came back and retested the breakout. Notice also this is sort of the second week, almost developing a little bit of a bull flag here on this time frame from the breakout that we saw in July. So very constructive action here still on the monthly time frame. You can see actually MACD looks like it made some progress higher this month, so there's still a lot of momentum here on the monthly time frame. If we look at the IWM, you can see closed higher on the month, up almost 1% above that 120.50 level. And then if we look at the NASDAQ 100, you can see finished up 2%, so certainly the leadership here. MACD continues to rise above the breakout level, continuation higher, highest monthly close, all-time high close on the monthly chart. So on that time frame, overall September, which is generally a tricky month, and it was a tricky month, was very positive across basically everything that we just looked at there. If we go back to the weekly time frame, you can see we finished up just barely here on the S&P 500, and then we're going to go right down to the daily time frame. A lot of jumping around, but let's take a little closer look at what the landscape looks like right now here on the daily chart. So with the late day rally or the late week rally here on Friday, closing up 75 basis points, that's really what saved the week for the S&P 500. It was a pretty volatile week, all things considered. Remember, we started off with this gap lower, which didn't end up seeing any follow through. We had 2 days up, then we saw a big move down on Thursday, and then we saw a complete reversal of Thursday. So it was a complete yo-yo sort of week. We were all over the place with some headlines out affecting the markets both on the upside and on the downside. But at the end of the day, once again, we finished basically flat on the week. So looking at where we are here, you still are pretty clearly range bound. Once again, a lot of movement, but not a whole lot of progress one way or the other. You still have more or less 217 on the upside. This is essentially the top of the range here that I'll be looking at. And then on the downside, certainly 212 is your lower kind of must hold line. But honestly, you could really start to cheat this up to about 214 or so, even 215. If you start to lose this general area where we saw some of these higher lows get put in, that's going to start to be where you'd want to start to get concerned, tighten up risk, or just adjust accordingly. So 217 on the upside, 214 on the downside. That's sort of the landscape, the trading range that we're playing in right now. It's tough for momentum. You're getting 2 days up, and then 2 days down. You're getting 2 days up, 2 days down. You're not getting consistent follow through. There are specific stocks and sectors that are faring a little bit better than the averages, but still, when you have the market as a whole here, back and forth, it makes, it generally creates headaches. I know we have felt it this month, getting chopped up in a lot of our breakout trades that, look great on that entry bar. You get all the, signals that you want to see. And then the next day or the second day, it just falls apart with the market. And we've just seen a series of that over the course of September. So it'll be interesting to see how the fourth quarter unfolds. We have, of course, elections, big picture, thinking down the road. But for now, one day at a time, let's try and resolve this range. Let's see how the market wants to get out of here. For now, we're still just fighting this sideways sort of tendency here. And we need some type of catalyst to sort of break us out, get back to these all-time highs, or make some type of more meaningful correction. This head and shoulders kind of pattern here is still on the table. I know the monthly chart we said looks constructive. The daily chart, though, a little bit ominous here. We just want to, we want to see this 217 taken out. That would start to invalidate this pattern, but you still have the potential there. So you just to keep an open mind and just be aware that we're at sort of a tricky spot here with the flat sort of 8 and 20 period moving average. If we go to the IWM, We start to look at the daily chart here. Still pretty indecisive, all things considered, a little more constructive, close to the highs of the year, but still kind of flat moving averages. They are aligned bullishly here, the 8 and 20 that I put on my charts, but you can still see a lot of overlapping price action. Once again, haven't really gone anywhere over the past week or so, waiting for a little bit more resolve for the IWM, and the Qs, like a broken record, continue to be the most constructive here, right close to these all-time highs. This is, in fact, less than about 0.5% from all-time highs. So much more constructive here. Still a lot of overlap recently, but certainly the Qs are taking things in stride and really kind of working off some of the sideways action with that upward bias. So again, when you start to think about where you want to be positioned, the Qs certainly a much stronger cluster of stocks here than some of the other components. With that, let's take a look at some of the other major markets here. TLT, if we look at the weekly chart, up 0.5%. So it did have a nice rally this week. It did get faded though. We were up closer to that 139 level. We did pull back off of it, but it's holding up pretty well, all things considered. Kind of had that V-shaped rally off of these mid-September lows here, and it's it's challenging this old kind of breakdown, or this support level where we broke down from, and it's kind of just battling it out here to see which way this sort of short-term trend wants to go. If it can continue higher, or if it's going to start to resolve back in the direction of this original breakdown. So be interesting to see. It's kind of at an inflection point, something TLT traders there probably want to be on watch for next week. If we go to gold, continues to consolidate here. It is near support that has been holding at this 125 level for the past couple of months. Still continues to consolidate. It's a pretty clean pattern, and it's at a pretty good inflection point here as well. So this is something you're going to want to pay attention to next week. Silver, pretty similar situation. Pretty violent day here on Friday. Opened all the way up at this 1864, up I think 3% or maybe north of that. It sold all the way down, closed near the lows. Again, coming into this support trend line here, consolidating just like gold, patterns taking a little different shape, but still something you want to be paying attention to, especially if it loses that $18. Then you'd want to start to notice that level and adjust accordingly there. If we go to USO, this one had a nice move higher this week. If we look at the weekly chart, up 7%, so a nice move indeed. All coming, or the majority of those gains coming from Wednesday. This was, I know, where we had sort of the rumor there on the whole OPEC cutting supply, and I'm not well versed on exactly what that all sort of means there. What I care about certainly though is the price action, and this was where we got long here on Wednesday at pretty much the closing price, 1064. We've already taken some profit out of here, almost half the position, and we continue to hold the rest. Like the breakout out of this pattern. I like this nice volume kind of expansion there, and expansion in range. So this was a trade that we're in. We're still long USO, looking for more upside. Weekly chart, you can see also trying to get going there once again after it successfully had this nice pivot down here on those August lows, pulled back. Now it looks like it's trying to break out again. So USO looks good. We're going to hold that into next week. UNG, on the other hand, continues to sort of falter here and fall back into this old kind of consolidation that it was in. A bit of a false breakout through late September here, when it kind of pushed above this 850 level, spent a couple of days up here, and now it's quickly fallen back into this bigger consolidation, this bigger picture. On the weekly time frame, you can see hasn't done a lot wrong. Clearly didn't have a good week, but you can still see that the 8 and 20 on the weekly chart still pointing up, still bullishly aligned. So it is still pretty constructive, but it needs to get back above, really at this point 870 to get that upper level momentum back in it. That's what I'd be interested in for a trade, but for now, just going to sit on my hands and just keep an eye on it going forward. And I think that pretty much wraps up the majors that I wanted to look at. If we move into some of the sector analysis, not much has changed here. It's been the same MO, right? Semiconductors continue to power higher, all-time highs for semis this week. XLK technology continues to perform well. IYT, the transportation average, Dow Jones, is actually doing pretty well again. We flagged this back here in beginning of September as a sort of emerging leading breakout candidate here. And as soon as we did, it had that pretty good sizable pullback all the way back down to this 139 level. Well, once again, it's quickly recovered back to highs here. So definitely has some type of pull here to push higher and trend higher. It needs to get above this 145 level. And it looks like, with the close on Friday that, it's certainly in motion. We'll have to see on Monday if we can see continuation there in the IYT. And then finally, XLE also had a pretty strong week, of course, with oil up, north of 7%. A lot of these names are going to fare well. Remember, we had the breakout above 70 back in late mid-August. Then we started to pull back and consolidate, came back underneath that breakout level, and we had this huge 4% rally back above 70. So it's been a lot of chop in here with XLE, but getting a fresh new kind of breakout signal here, that could be interesting for a lot of those names heading into next week. Might be what can pull the SPY higher if oil and energy continues to sort of be in favor. On the downside, we saw utilities take another dip. Remember, last 2 weeks ago, we had this sharp move higher with utilities, clearing this trend line here and getting back above $50. And then it very quickly gave it all back this week. I mean, it was basically relentless selling all week, every day here for utilities. Not constructive there. Failed to kind of hold these breakout levels here, this trend line that it broke out from. So XLU is a concern. IYR also, IYR also a concern. This is the real estate fund ETF. This also continued to see pressure basically all week here. And finally, staples, and we flagged this as kind of being weak. It's still consolidating, so it still has some potential here to have an upside breakout, but clearly the positioning here underneath the 8 and 20 bearishly aligned, kind of looking like you had this kind of impulse leg to the downside. So not looking very constructive, just given where this consolidation is taking place, but something that's getting tight that you may want to pay attention to next week. Could be some new trade opportunities here in XLP, depending on which way this one ultimately leans. Now, if we move into some of the individual names, we'll cover just the popular individual ones that most of you guys are looking at. Apple continues to consolidate pretty healthy fashion here. Again, I consider this a nice bull flag. Had this nice strong impulse leg from 102 all the way to 115. It's working that off through a little bit of time and digestion down, retracement lower. So very healthy action here. To look for a breakout above 114, 115 to start to get going there on the upside once again. Amazon continues to really ignite to the upside. Tremendous move here. It's just been accelerating higher ever since it cleared $800. It's been basically nothing but higher, ignoring all of the market weakness and volatility that we've seen recently. Amazon just kind of trades higher in its own world. So looks great and is certainly a little bit extended here, but once again, like I think I've mentioned, it's not a name I would be trying to fade. There's just easier shorts out there. Amazon would not be at the top of my list. Facebook also getting pretty tight here. This one consolidating ever since, making these all-time highs up there around 131. It continues to consolidate for basically the entire month of September, which really isn't horrible price action by any means. Of course, you don't want to see a long consolidation end up resolving to the downside, because that would indicate that this was all distribution. But we still need to see, every continuation, every pattern here, every consolidation in Facebook has basically been a continuation pattern over the past many years. So you just want to wait and see how this ends up resolving. You got your range here that's pretty clear on the upside and the downside. So just stay patient and just keep an eye on these levels. Google continues to sort of hang in there as well, not doing a whole lot wrong, not doing much to get worried about just yet. $800 is holding on. We had a downgrade this week in Google. It took that in stride, couldn't make any forward progress, but it's, again, not really breaking down through support just yet. So something's going to give here sooner or later, just because this range is getting pretty tight in the 5-6 day range that it's been in. So keep an eye on 810, 812, gets back above there. You got kind of a fresh breakout signal. If it starts to lose this $800 level short term, you could be concerned, but really, your bigger supports down here right around 787. And finally, Alibaba will end there today. Continues to trend higher in this channel here. It's these candles are pretty wide and kind of all over the place, but it's holding the 20 period all the way up. For most of it, actually held the 8 period as well, but you can see it's pulling off a bit from making those 110 highs. You get this trend line of support here. Let's see if buyers step in right at this at this rising trend line once again, or if we do finally get some type of pullback and deeper correction. That would be an interesting buying opportunity if we do see that in Alibaba, which has emerged as a leader here over the past couple of months. So that's all for today's video. I hope you guys enjoyed. Hope you have a great weekend, and thank you as always for watching, and I will catch you next time.